For more about the situation in the Eurozone and retail sales, we're joined now by Britt Beemer. He is the chairman and founder of America's Research Group. Welcome to the show. Britt, I want to ask you this austerity and the budgets and the retail sales figures. I mean, overall, they could be a lot worse, could they not?
Well, they could be worse, but the problem is that you have an economy where in the United States, where it's consumer-driven, and now in Europe, you think about the fact that the average European family has a disposable income level. For example, an American family has 4.5 times more disposable income dollars per family than a European family has. So there's no way the consumers by themselves can drive the economy forward because there's just not enough disposable dollars out there. And the reason why it can be worse is that even though the European countries have spent a lot of money to get the economy going, they still can't get it off the middle needle to get pushed up to a much higher level. That's their problem.
Britt, earlier the ECB president talked a little bit more about perhaps cutting rates again. I mean, you saw the headline from last week, and I guess the question is, the rates, as they keep lowering them, are they helping the consumer? Are we seeing some progress there?
Well, retail sales in Europe for the last 2 months have been down. And of course, but the real trouble has been is that, manufacturing output's been down for the last 15 months. So, I mean, it's such a stagnant economy. And one of the problems is that when you talk to Europeans, and I looked at a study last month that was interesting, is that, consumer confidence in Europe is almost 15 to 25 points lower per month than it is in America. And America, it's really poor around 70 points now. So you're looking at an economy where only you have consumer confidence rating somewhere between 50 and 55 points, and that won't drive anything. So, I mean, that's the problem is that the consumers are just totally upset and they don't see any light at the end of the tunnel unless it may be a train coming at them.
In the event that we want to be optimistic about this, what's perhaps the one figure we need to watch closely? Is it discretionary spending? Is it just general retail sales? Is it a laggard, or is it perhaps a foreshadowing of future events?
Well, I mean, discretionary spending has got to go up before retail sales can go up because consumers in Europe are simply not borrowing money. As you know, one of the problems is the cost in Europe is so much higher than in America that families that have money, and when they go out to buy things, your budget is really consumed by essentials, food, and those items, which are much higher than they are in the United States. So what's happening is unless these consumers can get some disposable dollars, it's going to be very hard to push them out of this recession.
When you talk about disposable dollars, I suppose we look at places, for example, Hong Kong and the United States, where the property market has been very much on the rebound. And as these asset levels go up, consumers feel better about themselves and they'll spend more money. Let's translate that into Europe. Europe's stock market has been doing fairly well. Will that translate into perhaps a more positive consumer sentiment?
It could at the upper end, although the number of consumers in Europe invested in stocks is much lower than in the United States, but certainly if the markets go up considerably, that's going to help. Of course, the other thing that's going to help is if real estate values go up, people have more money in their properties, that's going to help. But the problem is that what the consumer in Europe is seeing is that more and more government services that used to be provided are going to be cut back, and yet there's no money for them to buy those extra services. So that's really where the rubber hits the road. You're paying more in taxes and getting fewer services back, and then you have to compensate with what you earn to pay for those services you're no longer receiving, and that's why consumer confidence levels are plummeting.
Last question, I guess, is the worst over, and what's the probability that perhaps that we have really turned a corner here for Europe?
Well, I think the recession is certainly going to be continuing on between 2013 and probably into early 2014. It's kind of hard to see from 12 months from now. I think we may have turned the corner a little bit, but I think when you watch this summer, the other thing is that Europeans are really hoping that with the lower euro level, tourist levels into Europe will be really big this year, and tourism is really the one thing that makes the European economy go even more because those dollars flow into the economy through all those different areas from hotels to restaurants and whatever else, and that helps feed the rest of the economy. So I think they're hoping that the lower level of the euro will make Europe much more appealing for Europeans to come over there and spend more money, but also for Americans and everybody else to come and spend more money over there. And that's what I think they're really looking for the most with this lower euro pricing today.
Britt Beemer joining us from Orlando. Thank you very much.